Tesla stock is getting destroyed today, down 2.7%, even though the markets don't even look that bad. Nasdaq is up 0.5%, S&P up 0.37%. So why is Tesla getting destroyed? Should we be worried? And what is going on? What is my position in this whole thing? I tweeted today and told everyone I'm not doubling down here, and I will explain in a second why. Now, the Tesla performance is very disturbing, and clearly today that seems to be a function of this man here. I show you a man, JP Morgan analyst Ryan Brinkman, with an average return of negative 1.60 and a success rate of 50% and 1 star. He ranks number 10,493 out of 12,000 Wall Street analysts, not bad. And he is saying a bunch of things, mostly the usual stuff. I summarize it here. He is saying Tesla is overvalued. Guess what? Surprise, surprise. He thinks Tesla is overvalued because it's an auto business. It has a core auto business. This is deteriorating right now, as all auto businesses worldwide, because we know there's a little bit of an auto crisis. There is too much competition from China. The Chinese themselves are falling apart. The Europeans falling apart, the Americans falling apart. Tesla, by an enormous distance, the most profitable automaker in the world by margin. But still not looking too great. Tesla slowly recovering now, taking the lead from BYD again. But the car business not looking too good. That is what Brinkman points out here. And of course, the stock trades at a 335x earnings multiple, which is high when you look at the normal, regular Tesla core business. There's also this question that I actually also don't know the answer to. 50,000 unsold inventory in the last quarter. So Tesla produced 50,000 cars more than it delivered. Maybe that's a function of some delays in the delivery chain, or who knows what's going on. We don't know exactly what's going on. And that, of course, concerns him as a standard auto analyst. He sees the inventory going up, these cars sitting somewhere, these 50,000, and, free cash flow deterioration potentially. That's his concern. And then, of course, the most important part, because we don't have to discuss that Tesla as an auto company is overvalued, obviously. But the argument, of course, that even Brinkman knows is everyone says, I'm not investing in Tesla because it's an auto company. I am investing in Tesla because of Optimus humanoid robots. And even more important, short-term, Cybercab, autonomous transport, robotaxi, the revolution of self-driving cars that is launching as we speak, and that will scale and start scaling this year in earnest. At least that's my expectation and the expectation of many other Tesla investors. Of course, Brinkman addresses that and says the bull case treats Cybercab and Optimus as free upside embedded in the current price. Free upside, I'm not sure if that's true, but the price should be a function of these future revenue streams. That's what I'm saying. That's what many others are saying. And Brinkman inverts this. There's execution risk. Cybercab needs regulatory approval in every market, which is not true, by the way. That is absolutely not true. There are many US states where you can just roll these things out. The regulatory approval hurdle is completely a joke. I said that multiple times. It does not exist for the first tens of thousands of these things. Can totally forget it. No one cares. This is not happening. At the minute this works, they can roll it out. We see Waymo is scaling a little bit. They are not running into any regulatory issues. Regulatory is not an issue. The issue is FSD has to work. Full self-driving technology has to work. And then you can scale this into hundreds of thousands, in my opinion, by my assessment, without any regulatory hurdles that are in any way problematic. Optimus, the humanoid robot of Tesla, Gen 3 is delayed with no public reveal date. Well, we know that the Optimus revenue streams are kicking in next year, not this year. And I don't care that it's delayed. You also don't want to rush this thing. You don't want to reveal it to the competition. I am very relaxed on the Optimus time schedule. There's some AGI stuff that has to catch up. If either slips 12 months, the entire justification for the 335 multiple X evaporates. Of course, that's highly idiotic to even say that. No one cares if it slips 12 months. Robotaxi would hurt us a little bit. So that is the argument of Brinkman. I think that is the main cause for this drop. JP Morgan is a big firm, and you see what happened to the stock here. But let's take a step back and think about this. I want to first address very quickly Brinkman's arguments. Of course, you already know the answer. This is not very smart what he's saying. Also, we have to look at his track record. Look at his track record. December 2020 at a price target of 90 when the stock was at 640. Guess what happens? The stock doubled. So Tesla was at 640. He said it should go down to 90. What happens next? It goes to 1,200 before the split. And so in 2021 and 2022, he missed out even more upside. In October 2024, he set a price target of 130. The stock at 240. What happens next? Stock subsequently rallied to 480 by late 2025. Also by late 2024 already, and then again 2025. So his 130, not happening, right? That was in October 2024. He set a price target of 130. Next thing you know, this thing hit 460 in December. In October, November, December, 2 months later, it was at 460. So doubled nearly from where he made this call. Then it dropped a little bit to 220, and then it rallied to 490 technically, right? And now he says this, price target 145, and he says this still, and he will look even worse very soon. That is what I think. So we should not overestimate this. So what is happening, and why does this guy drop the stock so much today? And the answer is, by the way, I show you quickly what I was talking about here, is what you see. What his track record looks like. 2020 is at 90, stock was at 640, stock goes to 1,200. Right? Then in October 2024, he says 130, stock's at 240. Next thing you know, it goes to 460 2 months later, and 12 months later at 480. So track record is not brilliant. That is a little bit of a problem. So I would completely discount his perspective. We know exactly what the problem and the challenge is for Tesla. Of course, we are buying the stock not to sell a bunch more EVs, even though Tesla has the highest margin and the best production capability in terms of producing high-end EVs at high margin, the best company in the world in producing EVs. But that's not what this is all about. We know what it's all about. Tesla is a technology leader, completely uncontested right now, in full self-driving technology that drives car sales, but it also allows us to deploy robotaxi, and that is very quickly an enormous business. Someone posted on Pioneerlands, actually, in Pioneer Academy. Go to pioneerlands.org, by the way. Like and subscribe this video. I never say that, but do it. This is a lot of work, what we are doing here, and you can help the channel by subscribing and liking. But someone posted in Pioneerlands, I did the math. In order to have just the quarterly profit of NVDA, Tesla would have to have 1.7 million cybercabs or robotaxis out in the open. And to that I said, like, sure. In order to have the quarterly profit of NVIDIA, you need 1.7 million robotaxis out. That is not unreasonable. Don't forget that NVIDIA is the greatest money printing machine on earth. So clearly that would be very nice. And if you have 6 million out there, you beat NVIDIA's entire free cash flow, which is quite the achievement. Of course, 6 million robotaxis are not easy, but it tells you where we are getting to. And if Tesla would have the same free cash flow as NVIDIA, the same EBITDA, let's say, the valuation would be triple that of NVIDIA, roughly, in my estimation. Because Tesla would be growing much faster than NVIDIA, and Tesla would have a much more accepted super TAM than NVIDIA has. NVIDIA is under pressure because people think it can't continue like this, whereas robotaxi, everyone would understand, okay, they can take over global transportation here. It's an enormous TAM, multi-trillion-dollar TAM. And so the PE on Tesla would be much higher if it had the same EBITDA as NVIDIA. So yes, at 6 million robotaxis, Tesla would be 3 times larger than NVIDIA, $15 trillion. That's exactly right. So it is all about the question, are we actually on track of launching robotaxi? So all this JP Morgan talk of Brinkman comes down to a very simple question. Do you and I believe that FSD and robotaxi will launch this year in earnest and start scaling its commercial operations into the multiple thousands, ideally tens of thousands of deployed robotaxis this year? And I still do think the answer remains yes, as I have said for over a year now. I think it's going to happen. I can't tell you if it's going to be multiple tens of thousands. That would be very nice. In my opinion, multiple tens of thousands would drive the stock above 1,000, not 145. He would be off by 8x roughly. If it's just multiple thousands, it doesn't matter much. It will be less, of course, but once we are up to the multiple thousands, I think the scaling game is on. Everyone understands you can deploy millions and tens of millions of these things. Not everyone understands this, but a lot of people. And Optimus, we don't even need Optimus to get the stock to 2,000 or 3,000. That's also something very important to understand. Robotaxi is an enormous opportunity. I think Optimus is definitely coming, but it's definitely smart for Tesla to not reveal anything before they're ready, because that is actually a space different from Robotaxi, where there is massive competition waiting in China and everywhere. So with the humanoids, you have to be a little bit more cautious and get it only in front of the press when you're ready to rumble. And that will probably happen next year, in my opinion. And even then, it won't be super scale at Optimus. They will deploy a few thousand, maybe 10,000, test some things, and then they will get into the hundreds of thousands and millions in the 2030s into the millions. So Optimus, that is the second S-curve after Robotaxi. So why did I today actually post on X that I'm not doubling down? So because we have, for example, the surfing cyber surgeon, I think he's in Norway, smart commentary, and he said Tesla investors seem to be at an all-time low right now. Not all-time, we haven't seen much worse, but he's right. Retail investors and also other investors in Tesla are a little depressed right now. And he says, and have been sent into an unending spiral of depression. He must know that because he's actually a doctor. All the while, I'm still buying. Okay, and the surfing cyber surgeon, he's surfing, he's a surgeon. He's right about this. Normally, I would say, yes, we are all depressed. People are desperate. They are losing faith. I see it in all my comments on my videos and on X. I see a lot of people who are getting angry now. Joe, what are you saying? Tesla is toast. What did I even do? So people are start to lose faith. And normally, that's a clear buying indicator. That means, okay, we're hitting the bottom, rock bottom here. The sentiment is toast. Even the biggest bulls start to jump ship because Tesla looks so awful here, and it keeps going down and down and down and never ending. Look at this year to date, down 22%. Look at that tragedy that I totally predicted, by the way. And I said Q1 is going to be tough, and the inflection point is going to be April or May, which is now, not now, but very, very soon. So cyber surgeon, normally I would totally agree with him. This is the time to double down, but I'm saying no. I am saying I'm not doubling down. And people got, again, angry with me. And here, what is Overlord saying? Here, let me get to, oops. I'm not doubling down on Tesla. That is my tweet. And then Seeking Truth said, what changed? Delivery numbers made you believe that Tesla is not good anymore? People don't read my tweets. It's not that hard. What I said is I am not doubling down on Tesla until Iran is solved. Most people totally overlook the second part of this sentence, but it's very important. So let me explain very quickly before we move on, and I tell you what happens next, in my opinion, or what we have to watch out for. When you look at the whole situation, we can get lost sometimes if you're really into one stock like Tesla. Maybe you're into Palantir or NVDA or MicroStrategy, whatever it is. This favorite AI stock you have. We are getting lost in all these dynamics, and people do their chart analysis, become chart analysts and think about, oh, what is going on? Should I get out? Should I get in? Should I sell options? Should I sell calls? Should I sell puts? Dudes, what's very important in this world is take a step back, click on NASDAQ, this little button NASDAQ, go on year to date, and what you see is, oh, it's a disaster. NASDAQ is down 5.45%, right? It's on a complete drag down, and since here, when you observe it, here's February 25th. Here is where the Iran war started, and it's going downhill since then. And there was just a giant slide beginning of April or end of March, last week of March, when things really seemed to escalate. And now we have this V-shaped recovery. And that is why I'm not buying, because this is potentially the fakest V-shaped recovery I've ever seen. The NASDAQ is down only 6% or something from all-time highs. Let me look here, 6 months. All-time highs here, 24,000, maybe 21. So yeah, 7%, whatever, something like that. And this thing that happens to Tesla right now, sure, JP Morgan said bad things, downgraded the stock, but that is noise. That is not why Tesla is down. Tesla is down because the whole market is down. The whole market is down because of Iran, because the Iran war poses a significant threat to the world. And here's the reason why I'm not doubling down as long as this thing is not solved. The potential downside of that war is 10 to 20% in the NASDAQ. We are down, year to date, 5.44%. So we could drop twice as much on the low end if this war escalates, and 4 times as much on the high end, in my opinion. Why is that? Because Iran, when you look at Iran, is like a major deal. And people don't want me to talk about politics because they're all losing their mind all the time, but I don't care. We need to make money. We need to understand what's going on. And when you look at Iran, when you look at the Iran map, what you see is, we do a little geography here. This is the Iran map, and this is called the Middle East. Here's Israel. They're shooting stuff over here and killing a bunch of people. And then they're shooting stuff back, and they're killing people here. And then Israel, for some reason that no one understands, kills a bunch of people in Lebanon. And then you have all these people here, the GCC, that are fighting with each other a little bit, like UAE fought with Yemen a little bit, and Saudi Arabia doesn't like Iran. Iraq is a little bit split, but mostly on Iran's side at this point. Syria is messed up. Jordan, no one knows. Oman is friendly. So this is a very messy situation. But the most important thing is this strait here, the Gulf of Aden, the Red Sea. 12 to 15% of global trade goes through this thing, through this area here. Okay, and there are through the Red Sea. 12 to 15% of the entire global trade go through that strait. And here in Yemen, you have the Houthis. The Houthis are good friends of the Iranians, and they just declared that they're starting to shoot again. They could close the Gulf of Aden or the Red Sea. They could close down this entire thing. Here is the Strait of Hormuz, of course, the famous Strait of Hormuz, around Dubai, and on the other side, Iran. All the oil goes through there. And what we have seen so far is a massive disruption of the oil supply globally. Okay? And in a couple of weeks, we will see that disruption hit everyone. Because the disruption works at the ships. I talk too much about AI chips. This time it's about ships. These ships are being stopped. They're all, bunched up here. Even if we release it now, they're starting to trickle through a little bit because Iran is now making deals with Europe and some other people, letting some ships through. But all that stuff, the delayed supply, is now hitting the markets. So now it's getting a little more serious in the next couple of weeks in terms of market impact of these delayed supplies. And the entire market, when you look at what happened to the market, the Nasdaq Composite, this entire market setup that we only dropped 5 or 6% so far, is basically to be interpreted that we are discounting the entire situation. The market says it's over. Okay, this crisis is over. We have now priced in a little bit of supply disruption, but everything is fine from here on up. From here on forward, we have solved the problem. But when you look at the situation, it's absolutely not solved at all. Trump is desperately trying to push Iran into a ceasefire, and Iran is just saying, no, we are not going to do a ceasefire. Okay, this is bad. And the fact that now ships are going through the Strait of Hormuz again is a fact that Iran is gaining the upper hand. Look at this, for example. India, here I click on this. India is now buying turns to Iran for oil and gas after a 7-year hiatus, signaling limits to US tilt. So there was an embargo on Iran, and now everyone says, screw US embargoes, we're just going to buy the oil. And that's why these ships are getting through. It's not a success of US pressure, it's the opposite. That India and Europe and France and all these people are now making deals directly with Iran, settled probably in yen or euros or whatever. No one knows. Not in dollars, which is a whole different story. That's why they're getting through now. So Iran has now control over the Strait of Hormuz and is going to open it up and charging everyone a toll. That would be good news, in my opinion, then at least we have the oil flowing. But that is not what Trump wanted. And Trump is still threatening to attack them. And now Trump says, we have a deadline coming up tomorrow. Trump says Iran ceasefire proposal significant but not good enough. Okay? Trump wants desperately out of this war, but Iran doesn't want a ceasefire. So I'm not saying it's not over. What I'm saying is this can go both ways. It can go both ways. And it's very important for us as investors to become a little more rational. Don't scream, don't be little babies, don't be cry girls and say, I love Trump, how can you criticize him? Or the opposite, I hate him, whatever. No one cares if you love or hate Trump. What we care about is, what is the risk here? What is the risk that this actually falls through and we see an escalation and Trump has to follow through and bomb a bunch of stuff? With the risk that Iran retaliates pretty badly and starts destroying oil infrastructure in the other Gulf states. Whatever that risk is, it's definitely not zero. I would say it's close to 50% if you ask me. This is unhinged, this whole thing. Sure, Trump has a huge incentive to not do that, but at the same time, he trapped himself a little bit. So the hope that Trump gets his way and this war is over, whatever the percentage chance for that is, it's not 100%. But in my opinion, the market has priced in 100%. That is 100% priced in that the war is over. Because if that now escalates and the United States starts destroying infrastructure in Iran and Iran retaliates and destroys oil infrastructure all over the place, I do believe we would see a massive market crash if that happens. Because it's not priced in. And if that happens, our favorite stock Tesla will get murdered. It will drop 20%. It will drop 10 to 20% if the Nasdaq drops another 5 to 10%. And the Nasdaq will drop if that happens. Because look at how it behaved. This is not how you behave when the oil price goes to 150 or 200 and stays there for a long time. And that's exactly what can happen. So my assessment here is this is not a fairly priced market. The risk is not priced in. And that's why I'm staying out as much as I can. I'm not going to touch, of course, my long-term AGI positions like Tesla. I, of course, always remain my core position, but this is not the time to double down. It has nothing to do with Tesla. It has nothing to do with JP Morgan or Brinkman. It has everything to do with a crazy, crazy fight in the Middle East. With Trump, little war, with Iran not playing ball, and the whole situation. Now, I know cyber cap is potentially coming up. We have to watch this day by day. This is not something that I tell you and I'm sticking to that for weeks. No, this is a very tactical situation. It could be over tomorrow. I will keep you updated what I think about Iran, but Iran is everything for us right now. Tesla is just a sideshow. Once Iran is gone, then we have to refocus on Tesla. If Iran would be gone and off the table, I would say absolutely time to double down on Tesla because this is an enormously powerful deal we get on the stock given the situation with cybercap coming. And I'm very, very bullish on this actually happening. So once we have that macro risk off the table, it's time to go. It's time to double down. But the macro risk is not good. It is mispriced in the market. The market has enormous downside from here potential. If anything goes wrong, now it could just go right, and then we will review the situation again. So I keep you posted. I hope that was interesting. We will see what happens. It's definitely a time to be glued to the screen, even though normally you shouldn't be glued to the screen. You should be glued to this channel and X and Pioneer Lands because we are watching this and it is time to be on top of your game because if this works out the way I think, it could be beautiful. But I don't want to take this market risk. I hope that was interesting. See you tomorrow.